Hello and welcome everyone to another market commentary from StashAway. With us, of course, again, our Chief Investment Officer, Freddy Lim.
Hi.
Hey, Freddy. Again, lots of things going on in the markets. I think, we had a weekend in between videos, so we can catch everyone up a little bit on what's going on and really look a little bit more forward as well, right? Not just always looking back. Before we do that, I just wanted to remind everyone again, if you have any questions, please feel free to put them in the comment box below and we'll be able to answer them over the next week or two. Again, we had some really great questions come up over the last 2 weeks that we will be covering today as well. But let's start with kind of what's going on. Maybe we can do a little bit of an China outlook and also see what the situation is kind of globally.
Well, by now it's common knowledge in the media that China has unfreezed. Activities are getting back to normal as per our conversation last week. Now, the further confirmation came from a more traditional data this time. So the steel inventory. The amount of inventory that's on storage for future demand has dropped quite substantially in the latest print. That confirms our view that the mobility data from WeBank and the daily calls to ports for shipping, those numbers were really advanced indicators, and they were showing a lot of restoration in economic activities in China. So we got a triple confirmation by now, and the rest of the world just have to catch up before we see a wider sense of optimism. Yeah,
and I think also what we've been saying before, right? A lot of companies, global companies, are starting to report stores are being opened again, Apple, for example, and some other ones. Starbucks came out yesterday as well saying, hey, even in the Hubei province, they're starting to open their stores again, right? And people see the uptick because they want to go out, right? After being inside.
There's been already wealth and savings in China. And people are bored by now. And this is pent-up demand. And in fact, inventory were drawn down quite quickly. In fact, without mentioning names, we know that certain multinationals have been trying to draw down the inventory from elsewhere in the world to meet the Chinese demands.
Correct.
So that's a very good anecdotal evidence.
Good, and then I think this is where also companies are drawing the conclusion that they kind of feel like they have a feel now of how this will play out in, let's say, Europe, and then afterwards in the US, right? Because everyone, like Europe is 4, 5, 6 weeks behind and 2 weeks more to the US, right? So I think they can manage the situation a little bit better, right? In terms of how it will play out. What about earnings? I know there was a lot of telco earnings in China, right? So we got a little bit more of an insight of what is going on there. Maybe you can tell the users a little bit about them.
Earnings is a bit of a lagging indicator right now. They have not captured the full effect of the coronavirus, and because a lot of it is the full year 2019. And as we mentioned a while back, prior to all these outbreaks and the oil shock, prior to all this, we've been mentioning that there's been consistent improvement, strong rebound in Chinese leading indicators, and that's been true throughout Q4 last year. And those earnings are going to confirm that story further, but without the impact of the coronavirus. Yes. However, as I've said that the market has been tested, we knew that a week and a half ago, if I remember correctly, Chinese industrial output has dropped by 13.5% year on year in one go, and that was your impact for the coronavirus. And the market fell a little, but it wasn't like another doomsday move. So it's sort of, I think by now we can say that the market is close to pricing in a lot of the bad news, and it's time to start moving forward and look forward to the second half of the year.
It doesn't take much, right? And I think we saw that already this week in the markets, right? Monday, roller coaster down still, right? Yesterday, what is like the third, fourth best day in Dow history, right? Since the 30s, right? Yeah, exactly. Up 11+%. This is obviously was driven by substantive Fed action, saying basically they do whatever it takes, right? Like for real. And then obviously hopes of passing the stimulus bill, which now actually just minutes.
It just got passed today before, in Asian time.
Maybe you can tell listeners a little bit about the stimulus bill, why it's important, and also, what are your thoughts on this? Was it already priced in, or is this now going to help?
Well, I don't think it's fully priced in because, firstly, throughout the whole pickles, when we have an impasse there first, the numbers keep going up. And to be fair to the Democrats, their thoughts were thoughtful.
Yes.
They were thinking about how not to just help corporates, right? And how to have enough oversight of corporate receiving aids. I mean, if I receive aid and I just fire my workers, that's not acceptable. Correct. So they're trying to beef up the defenses for workers, paid leave benefits. And so this much more comprehensive than what the Trump administration were thinking.
And important, right? Because you need to keep the unemployment rate low, right? You still want consumer coming out of this market, right? Out of the short-term turbulences.
But then the bigger thing throughout this whole back and forth was the numbers kept going up. Yes. So the last counter proposal by the Democrats, we're talking about $2.5 trillion rather than 1.3. So it's bigger, more thoughtful, more balanced. More corporate governance, and they also put in some cross like airlines. Receiving aids should have emission standards curtailed. I think that's quite fair.
Yes, I think it's quite fair, exactly. And I think, like you said, this should also reassure the markets a little bit on, there is things going to be done, and they're going to be quick now, hopefully.
Before I forget, we just got past this bill. Yeah. Details will be fully released by tonight our time and tomorrow for New York. But already, Democratic senators are asked to look at 2 more bills.
Yes. So
more
who
bills
knows what else is coming? Exactly right? They needed to make a statement, one out now.
The policy bazookas are coming.
Yeah, which is good to see. Let's move over to questions from the listeners. We got quite a lot of them, so apologies in the first place if we don't get to yours today. We will keep them and we will ask them on the next one. But one of the listeners, Fenaldi, he was asking us a couple of questions actually, right? He said, could we address how the lockdowns and disruptions in such as industries like airlines, hospitality, retail worldwide, because it's basically shut down, right, outside of China, go and affect any market prices? And isn't that devaluing our holdings even more, right? Because it's not, he's probably thinking it's not priced in kind of way, right? Yeah, what do you think about this?
I mean, it's out there. It's not new, and those stocks have taken the beatings.
Yes.
And that's before the policy bazookas came in. And so airline themselves have asked for $58 billion in aid from the government, and they got $58 billion exactly in loans, and they are not even nationalized yet. I mean, we could very well see if further down the line more troubles brew, that the government take an even more proactive approach like they have done back in 2008, where they own stakes in banks, right? Yes. There's nothing to stop them from owning stakes in airlines, hotels, and otherwise. The key is to craft an exit strategy where when profitability returns over years later, there's a strategy for the governments to slowly resell the stakes back to normal shareholders, right? So that's been the experience we've seen back in 2008 for banks. It took like a couple of years to unwind, right? So we're going to be likely in those situations again.
Thanks, Freddy. I think that makes a lot of sense, and hopefully, Fenaldi, we answered your questions there. So let's go to one more.
Perhaps just to add that the market is a fast-moving voting engine.
Yes.
So if the pricing of it before the bazookas came in were close to being recessionary, then selling at a low is the last thing you want to do.
Correct.
So it's always not about just the market price, it's also about the scenario for the economy. If the data hasn't shown, but we got to ask ourselves, what is the market price telling us? And if that close to a bad enough scenario, when the news confirms this, you wouldn't actually realize there's any movement at all in the markets. So it's a very very non-linear relationship between the markets and the information that arrives eventually. Right? Like they say, buy the rumor, sell the news.
Yes,
exactly. This is exactly one of those ancient proverbs from great investors.
I couldn't be more. Right, but let's grab one really quick one before we wrap it up here to not make the video too long. From Gary Tan, he was asking, the StashAway investments in the global portfolios are denominated in USD, right? So he's asking, the SGD weakening, which is, it's weakened almost 8-9% to the US dollar, right? Is this an area to be concerned as a customer because they are USD denominated portfolios?
It's actually the opposite. Although it's quoted in US dollars, it doesn't mean that you will have all of your assets exposed to US-based asset classes. In fact, a lot of them are elsewhere. So for example, Asia, Japan trading in the US, is quoted the price in US dollar. If nothing else happens in the world, US dollar drops, the price of the ETF goes up to balance out the effect, because the underlying exposure is 38% China, 19% South Korea. There's not a single drop of US dollar exposure in there. So it's just a quotation currencies. Now, it's a second piece of it is even more interesting. As I mentioned before, the StashAway algorithm from day one looks at portfolio insurance, building it from day one. And one of the avenue of doing that is through currencies. And for depending on which portfolio you are on the platform, you will have varying degrees of US dollar, yen, and euro exposure, the funding currencies, the safe haven currencies exposure. So you're actually getting offset in some of those asset classes that's in USD. Say for example, if it's 50% of your portfolio is actually in USD and you just appreciated 8-9% against the Sing dollars, you're going to get a nice 4.5% offset.
Correct.
On your return in Sing terms, right? So that's all been built into the algorithm.
There's a reason for it, right? So,
yes, there's a reason for that.
Yeah, no, thank you very much, Freddy. Again, thank you everyone for those questions. We really appreciate them, and they're also always interesting for us to read what's on everyone's mind. So keep them coming in the comment box below. Otherwise, from Freddy and myself, this is it for today. We will certainly be with you again next week. And other than that, hope everyone has a wonderful rest of their week. Thank you so much. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.